The hashtags crypto and stocktok rack up billions of views. Creators battle for eyeballs on their financial content. This could be money they made that day, investments they're excited about, or profit-making strategies. Videos cover crypto, stocks, or really anything that could increase in value. This is a double-edged sword though, because on the one hand, the more people curious about finance, the better. On the other hand, you need a base of knowledge to be able to tell finance gold from garbage. With existing knowledge, you can take content with a grain of salt, maybe picking up a good idea here and there. The issue is most young adults turn to TikTok as a complete introduction to finance, and this can be the fast track to going broke. I spent the last week going down a FinTok rabbit hole, and I have one conclusion. FOMO is the name of the game. The bigger the promises, the more the views. So I decided to try this out for myself. I made 2 TikTok accounts. One to post pure hype. The content would recommend certain cryptos or stocks with very little context. The other is only sound, safe investment information. As many variables as possible will be limited using the same hashtags, time of posting, and even account photos. I'm going to post 10 videos on each account and then report back after 1 week of results. The fact that hype stands out probably doesn't surprise you. This is the case on every single platform. But what if I told you the system is literally built to give you poor advice? See, TikTok videos range from a few seconds to 3 minutes. And 3 minutes is enough time to get some valuable points out, but not quite enough to fully flesh out all the pros and cons. But this isn't the issue in and of itself. Short content can be great. The issue is finance creators are competing with everything else on TikTok. How can a delta neutral stock strategy compete with this? How can a deep dive on tokenomics compete against this? This forces creators to adapt. In finance, that means posting hype and fluff, because they're literally competing with the most entertaining videos on the planet, according to your algorithm, that is. And let me tell you, creators hate this. As a creator, you get into this because you have a passion. And then you quickly find out that your 8-part series on inflation hedges only gets 12 views, 2 of which are from you letting the video loop while you wipe your ass. And eventually get sick of it because no one cares. But then you think, what if I put 2x in the title? And it works. But this is a vicious cycle. Next thing you know, you're promising 1000x returns and using music video footage to sell the crypto billionaire lifestyle. And the craziest part is, this benefits no one. Not the viewer who's getting subpar information, not the platform for being known for subpar information, and definitely not the creator who started this to share his knowledge but ended up a hype slave against the algorithm. To help better understand this, I decided to call my friend Humphrey, who's seen a ton of success on TikTok.
So what I found that does best on TikTok is either some sort of content that shows you how to make money, or some sort of content that explains things in such a simple way that every person could understand it. So very broad appealing. You have to make it so broad and appealing, or again, hook them in a way and then sneak in information. Or you can start the video off like, these people are making $20,000 a month off Cosmos. Here's what Cosmos is. So all of a sudden their interest is piqued because they're learning about something that can make them money. TikTok pushes you content versus on YouTube, it's highly searched for content. So those are the biggest differences that I see. It's pretty easy to become a content creator on TikTok. In fact, it might be less than 30 videos where you get over 100,000 followers. Building goodwill on YouTube and building a reputation on YouTube is much harder.
This isn't to say there's no good creators on TikTok. Humphrey is a perfect example. Some of the best creators focus on realistic long-term goals. And one of the most common and least controversial topics is compound interest. Basically, by putting your money into a well-diversified index fund, you accumulate more and more capital over time, setting you up for a nice, healthy retirement. To present this, creators run a hypothetical situation. You invest a few $100s per month. This eventually nets you a stash between $2 and $3 million at retirement age. And that's pretty sound advice. The issue is, this kind of content doesn't really jump out at you. I mean, it's obvious that the potential to profit a Lambo over the weekend is more exciting than meticulously saving for 40 years. I asked Humphrey if he had any advice on how to stand out while talking about boring content.
I would say most videos on TikTok have to be entertaining. Even if they're educational, they have to be entertaining to even make it. Obviously, you can make a full-on how-to video on TikTok. It might be useful, but it might be actually just pretty boring.
And we shouldn't make it sound like there's only 2 types of investing. There are plenty of good options between the extremes of hype and boring. I mean, you can find solid story-based explanations of stocks and dividends, high-level descriptions of cryptos, or realistic budgeting ideas. But even this content isn't ideal for the viewer or the creator creator. As a slave to the algorithm, creators have to be as general as possible, as to not be boring for even a second, otherwise risk people scrolling on and the video performing poorly. While TikTok allows for 3 minutes, I found the most popular finance videos are 30 seconds or less, and it's extremely hard to give the full picture before that timer runs out. And this is a huge problem. Finance is nuanced. There are very few rules that apply 100% of the time. Take this creator. He introduces traders to technical analysis. The video says if the chart is trending above the short and long-term indicators, you can confidently say the price will increase, making you money. Sure, this indicator can be useful, but it's far from science, far from guaranteed, and accounts for 0 outside factors. And I don't blame the creator at all, because he's just introducing the idea. But someone could easily see this, thinking that it's a foolproof way to make money, ending up like this. But even videos like this are far from the biggest problem. One of the first stories that caught my attention was about a guy named Curtis Ray. He used TikTok to plug a life insurance product disguised as an investment. Over and over again, he would tell new investors to open an account, promising 4 times the average retirement income while racking up millions of views and followers. The problem is the TikTok algorithm promotes videos with the highest engagement, not the videos with the best information. This is fine for entertainment, but for finance, not so much. People see a guy using math on a whiteboard, promising massive returns with this confusing investment product, and they're excited, engaging with the video. And the algorithm thinks, oh, this video must be good. People are watching. The video then gets pushed to more and more people, making it popular, pushing bad advice even further.
I would definitely check out how many followers the person has. Obviously, that's not a proxy for good content, but it is somewhat of a proxy. So and see how engaged those followers are, because, you know, as I said before, there are channels with 1 million plus followers, but every video doesn't get that many comments. They might get less than 100 or less than 50 comments, and that's kind of an indicator that that person might not have a high quality channel, or that they got all their followers from one video, which often happens. Sometimes you can have one video do really, really well, get you 500,000 followers, but those people were only there for that one particular piece of content.
The most important takeaway is to always verify what you're seeing. Just because someone says something, even if they have a following, doesn't mean it's gospel. Always be willing to look up context and exceptions. If it feels fishy, it probably is.
Some of the bigger channels can be good too, but you'll find that as you get bigger and bigger channels, you'll get broader and broader content. So it depends on how broad of content you want. My content's, you know, arguably very, very broad. And so that might not work for someone who's really into finance, but might work for someone who doesn't know anything about finance. I would look at the hashtag personal finance or hashtag finance and see what the top viewed videos are. That's usually something that I like to do if I'm brainstorming, see what has worked in the past.
Oh, and what about my TikTok experiment? I posted 10 videos on 2 separate TikTok channels, one hype and one solid, grounded advice, to see how it goes, which becomes more popular. Well, here are the results. Although the numbers were closer than expected in terms of followers, the views for the hype account were 55% higher. This is with worse information and far lower effort. From here, I'd like to thank today's sponsor, iTrust Capital. iTrust allows you to place your crypto in a Roth retirement account. What this means is you can buy, sell, and trade crypto and pay 0 capital gains on your wins. This is amazing for traders. With a Roth, you pay your tax upfront when putting money into the account, and at retirement, you pay no tax once you start pulling out at age 59 and a half years old. This is probably the most simple way to save on all capital gains. iTrust will be linked in the description of this video. If you use that link to open an account, you'll receive $100 in free Bitcoin just for joining.